All right, I need someone. I need someone to let me know. Is this on YouTube okay? Is it working okay? Ooh, 104 people. Let's get this party started. It's Monday. It's Monday evening. Not a whole heck of a lot happens on a Monday evening. We did all our trades this morning. That was kind of cool. What did we have come up this morning for consideration? Bought some Halliburton, some Coles, some DFC, some Schlumberg, and some Intel, and CVS, and Newmont. Nice. I put $1,000 in dividend stocks. Is that dumb or not? All right. Can of beans. Canned beans. Cool beans. Well, what did you buy? What did you buy? What price did you buy it at? Did you sell a covered call against it? All those kind of nice, neat, fun stuff. Those are the kind of questions I'm asking because I'm just kind of curious. Horizon. HRZN. Let's take a quick gander at HRZN. HRZN. Well, I wouldn't have done it, but that's just me. No, don't get me wrong. Hear me out. I was going to pick up some M today. It decided to stand pat with my position for earnings. Okay, cool. I get that. But we're talking to canned beans at the moment. He bought some Horizon. Now, did you buy it today or did you buy it before? Because right now I'm looking at the chart. Check it out. Because here's the high of the year. Okay, that was in January. The low of the year was in November. So from November to January was the high. She dropped, back up again, and she drops down here from March through April. Then she starts to pull back up again. I was going to pick up some. I don't know why I didn't. It's monthly. Yes, I understand that. I bought it at a dumb price. Not gonna lie, $11.70. Well, $11.70 is really not that bad. That is going to be a no. I mean, this one's a no also, but I'm just trying to help the guy out through his position. Okay, now the reason why Meta is a no, they haven't paid dividends consistently. I like 20 years or more of increased dividends. Still qualify. Craig, I'm not quite sure what you mean by that. Because it's a monthly. Okay? Horizon is a monthly. So I personally don't do monthlies. Why? Well, because you can only do a covered call 12 times a year. Which means he bought it at $11.70. All right? So, best case scenario. And look at the options it has available. It's got the 750, the 10, the 1250, and the 15. Okay, so XEL, a great pickup for me. Okay. But Horizon has consistent dividends. What's wrong? Best stock for dividends. Coochie Man. I like Macy's. Macy's is my favorite this year. Macy's, Nordstrom. Yeah, Macy's, Nordstrom's, Kohl's. All right, so canned beans. It's a monthly, number one, which means I can only write a covered call 12 times, and that's it. Okay, that is it. It doesn't qualify for the strategy. But considering you already bought it, what's your exit target? Why can you only do covered call 12 times? Well, all trades. The only reason you do 12 times is because it's a monthly. Okay? So it only has once per month. Okay, so the next option you can do is June 21, June 24, which is 32 days away. Okay? I want to hold it for a year because I'll have 3,000 by the end. I'm not 100% sure what you mean by that. Okay? But if that's what you want to do, that's what you want to do. I don't tell people what to do. Johnny, watch out, Baba. Ooh, we'll take a look at Alibaba. Hold on a second. We'll take it back. We'll take a look at that in a little bit. But right now, sold my Macy's 1950, 95 cents. Woohoo! Way to go. What's the strategy? All right, canned beans. The strategy is covered calls with predetermined dividend stocks. Now, this is not a predetermined dividend stock. Okay, this has a monthly option, which means it can only do it 12 times a year. It means the most you can make out of this is 24, 30%. That's about it. Okay, now once it has weekly options available, now Verizon would have been a better one than Horizon. You know, Verizon rather than Horizon. The trend has changed in good dividends. I'm not 100% sure. James, what's the good word? 33. Your YouTube is not screen capture. It's showing the same angle as TikTok, but in reverse. Really? You do realize, hold on a second. 33. There's 2 YouTube channels. Are you sure you're on the right one? Weekly dividends exist. At what yield? Okay, dude, you're asking what yield? No, wrong question. Definitely wrong question. Do you invest in REITs? Not necessarily so. It all depends. Now, most REITs don't have weekly options available. Most of them are monthly options. Now, this one has weeklies. Well, what does that mean? That means is, well, you can only do it once a year. Once per month. It's only 12 times per year. I like weeklies. Weeklies I can do 52 times per year. And if I'm getting a safe, predictable, consistent 1% per week, that's over 50% per year. Here, at 12%, I'd be lucky if I can, at 12 times, I'd be lucky if I can get 24%. Pound money. Rebel, you need about 5,000 to be in this conversation. Not necessarily so. You're right, sorry. I was wrong. YouTube channel. Not a problem. Tea with Marie. How are you? All right. Gotta keep my movements very small. Very small and subtle. All right. Sorry, I don't like Horizon. All right. I only like companies that have 20 years or more of increased dividends. 20 years or more of increased dividends and weekly options. Why? Well, 20 years of increased dividends means I'm going to consistently get higher and higher dividends every single year. So when the stock comes down, look at this one. She went up, okay, a year ago. She went up, she came down. She went up, she came down. She went up, she came down. She went up, she came down, up, down, up, down. That's all they do. When a stock is in its downtrend, okay, so the high is here at 1370, okay, and then she drops down to April. What are you getting when it drops down? You're getting nothing. And how long is it going to stay down? You don't know. You never know. Nobody ever knows how long a stock is going to stay in a downtrend. Okay, but if you're consistently getting higher and higher dividends every single quarter, okay, every year you get higher dividends. That means every quarter you get a paycheck every 90 days. Now, if I have monthly options, I can do a covered call 12 times a year. But if I have weekly options, I can do a covered call 52 times a year. And if I'm doing it 52 times a year and getting an average of 1% each time I do it, that's over a 50% return. Okay? All right. You think I can do your strategy with $1,000? You can, but it's going to be a lot slower, and you have to use smaller price chunks. Okay, we use what's called dividend capture. Freaking cool, really is. It's very similar to what we're doing here, but we're not doing the covered calls. Denise, how are you tonight? Denise Anderson, always looking for women to join. It's like 70% men here. You know what the funny thing is? Like, guys don't want to admit this, but women are better at this than guys are. They have certain logical thinking. They think differently than we do. I mean, let's call it for what it is. Women are different than men. Women are better at this trading strategy than men are. It is what it is. Do you day trade by any chance? I suppose you could call it that, but not really. Do you need to already have shares to do covered calls? Kinda yes, kinda no. I'm good. How are you? Denise, I am wonderful. Thank you for asking. I broke my collarbone recently, Denise, so I'm a little bit in pain, so I'll be doing this every once in a while to adjust that brace while it's healing. So, RD21 mil. Okay, do you already know? Well, to do a covered call, you have to buy a stock and then sell a call against it. So yeah, you kind of have to have the stocks first. What do you think of AMC and GMC going up the last minute? Well, you got a huge difference there. Okay, AMC is American Motor Cars, or is it AMC Theaters? Okay, GMC is General Motors. Katie, I think you do pretty well with the trading strategy. Well, thank you, Miss Katie. You're profiting from it. You get more than 1% every single week, and you're happy about it. Okay? Stay away from AMC. Yes, I'm going to. Sup, bro? GG, what's happening? He means GameStop. Oh, hell no. I don't do meme stocks. If it doesn't have 20 years or more of increased dividends, I want nothing to do with it. Seriously. Terribly sorry. Okay? It's simple. It's quick. It's strategic. Why would I do anything else? Welcome all some. Can you explain how one does? Oh, I gotta go check that one out. How one does weeklies? Ooh, yes I can. I'm gonna read a few more questions first, then I'm gonna show you the weeklies. All right. Share the live. Awesome. Okay. All in GameStop has 20 years of degenerates. Even better. Well, alrighty then, GG. Hey, old dog is here. NYMT. Really? NYMT. Now, I'm going to ask you a question. All right, Philip Ramirez. Is NYMT going to be one of those situations where I'm going to say, WTF you thinking? Okay? I'm going to pull it up. Now, 20 years of increased dividends, weekly options, is it going to be on there? Callie, you want to join the conversation? I'm not 100% sure I know who you are or what you do. So if you want to join the conversation, get DM me with your number. I'll give you a call. We'll chat. All right, take a look at the scan. NYMT. 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 What the fuck were you thinking? Okay, Philip, you get that? What the fuck were you thinking? Number one, it's a monthly. Means I can only write a covered call against that 12 times. 12 times. That's it. Most I'm going to make off of something like this is 20% per year, if I'm lucky. Okay? Look at the price. $6.17. Can you honestly tell me at $6.17 that this company has increased its dividends to its shareholders for 20 consecutive years? All right, I warned you, Philip. What the fuck were you thinking? Seriously? All right, let's go to the next one. Apple. Take a look at it. Seth, you want to take a look? Seth wants to take a look at Macy's and Kohl's. Well, I like Macy's and Kohl's. Of course I do. Gigi's laughing his ass off. Austin, how you doing, brother? All right, so let's take a look at Macy's. Now, just to show you what it's supposed to look like, Macy's and Kohl's are perfect opportunities. What do I mean by that? Well, here's Macy's right here. $19.12. Okay? I want to open up just a little bit more. All right. First thing I always want to look at, besides the calendar, okay, find out when the company's paying out their dividends, I want to take a look at what can I buy it for. Okay, tomorrow morning, okay, you have the last price, $19.10. Okay, the bid, $19.10. The ask is $19.12. 6,300,000 shares were traded today. It opened up at 1953, hit a high at 1966, blah, 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 all those numbers. You guys seen this before. Those are the numbers. Mama said, over here on Instagram. How you doing over here, Mama said? Okay, so Macy's, I can buy it at $19.12. I can sell the 19s at 92 cents. That means I'm getting an 80-cent profit on a $19 stock. What does that come up to? Let's pull out the calculator and find out exactly what that means. 0.8 divide 19. Okay, so who wanted to take a look at this? Seth, you want to take a look at Macy's? Take a look. I can buy it at $19.12. I can sell the 19s for 92 cents. You dropped the 12 cents because you're losing already. Okay, but buying it at $19.12. I'm selling it at 19. Okay, I'm collecting 92 cents, which means I get an 80-cent profit. Now, I know for those of you guys that are new here, 80-cent profit doesn't sound like much, but it's 80 cents per share. So each share you own, it's 80 cents. All right? On a $19 stock, 80-cent profit per share comes to a 4.21% per week. 4.21% per week. Do you know what that means? 4.21%? That's almost 200% per year. Amortized. And this is just weekly. So I buy it first thing in the morning, tomorrow morning, $19.12. I sell the 19s, 92 cents. Yeah, I get 80-cent profit, which is over 4%. Over 4% for the week. All right, now, I love Macy's. I own a bunch of Macy's, and I can do it continuously. Why? Well, I do it continuously because, number one, they're over 100 years old. Number two, they've increased their dividends to their shareholders for more than 5 decades. That's 50 years of continuous increased dividend. So when the stock goes down, it's not if, it's when. The stocks go up, stocks go down. That's all they do. They do not come to your house, change out your spark plugs. Kind of funny thing, because I got to change the spark plugs on the cars. Okay, they do not do that. They don't come and wash your dishes. They don't answer your phone. They don't watch your dog. They don't mow the lawn. They go up. They go down. That's all they do. So when Macy's goes down and I hold on to it for the long term, I'm getting higher and higher and higher dividends every single year. Macy's is what is considered as a dividend king, which means for 5 decades or more, they consistently increase their dividends to their shareholders. And do your research. Check out the numbers. What's the earnings per share? What's the book value? What is the increase on dividends they have every single year? What is the profit over year over end? Lots of information you need to ask yourself before you come to the final decision. Do I like Macy's? Do I want to own Macy's? Do I mind buying Macy's and holding on to it? And they're paying, if you want to do this strategy, you can do it every week. Buy Macy's on Monday, sell the option, and collect 1 or 2, 3, 4%. Why not? They pay excellent premiums. All right, so let's go. What's next? Oh, I want to take a look at the charts first. All right, Seth, we're going to take a look at the charts also because we like Macy's. I like the numbers. I do. And I actually have Macy's in, I think, 4 or 5 different accounts. Because I have 6 accounts. I share 2 of them with you guys. I share 2, okay, with this strategy. Okay, now I have 4 other accounts that I do not share with you. So if I'm sharing with you this trading strategy, which makes 50% per year or more, what do you think I have up my sleeve? Now, I don't have long sleeves, but you know what I mean. What do you think I have up my sleeve? I have a trading group that I teach every morning, Monday, Tuesday, Wednesday, Thursday, 9 a.m. to whenever we're done. I think we finished today at 10:20 after they ran out of questions. Okay, Friday we're on at 3 o'clock because we want to make sure that the positions we pick up on Monday and Tuesday finish in a profitable position on Friday afternoon. Okay, it's a continuous thing. It's boring as hell. I enjoy it because I get to talk to a lot of people. And I get to help out a lot of people too. All right, so here we go. I like the numbers. So let's take a look at the chart and see exactly what the chart's telling us. Okay, so here is the 1-year chart for Macy's. We get our high over here towards the end of March. What is that, 2210, something like that. And here's our bottom right over here in October. Okay, and that's around 1050, somewhere in that area. All right, so the last 90 days. All right, here's the last 3 months, the last 90 days. Here's your high towards the middle of March, and here's your bottom towards the end of February. So the end of February is your bottom. She gaps up nice and big, and then she continues to make it the 90-day high, just over 22 bucks. All right, fine. Let's take a look at the last 30 days. Okay, here's the last 30 days. 30 days ago, around the $18 area. Okay, we dropped 1st of May, and that's around 18.10, the bottom, 18.10, somewhere in that area. Okay, 4 days later, she's up here at 1980, 1990. She pulls back, she shoots up, makes our new 30-day high right there. Now we're in a downturn. Okay, do I mind owning Macy's in a downturn? Hell no. I just keep on collecting the premiums every single week because I like Macy's. But that's me. You need to ask yourself your own question. Okay? Do you like Macy's? Okay? Do you want to own it long term? Because you just might have to. Now, I don't mind holding it long term because it gives me a freaking awesome premium every single week. I don't mind. All right, what's the best place to buy a stock at? I honestly couldn't answer that question. All right, someone's bored. If it gaps down tomorrow, then there's an opportunity, but I feel like Macy's will file bankruptcy. Really? And what gives you the idea that a company that's been in business for over 100 years is in every major mall in the United States? You think they're going to go bankrupt? Well, I think you do a little bit more research. Because a few months ago, I forget where they were. A few months ago, Macy's had a buyout opportunity, and they refused the buyout. Okay? They were offered, I think it was 21, 22 cents, 21 or $22 per share. And they said, no, we would buy our own shares back at $24 a share, which means that Macy's has no desire whatsoever to be bought up. They already got a buyout offer, and they already turned it down. Okay? They already said, no, we will buy back our own shares at 24 to avoid a buyout. So I don't think Macy's is going bankrupt. Okay, Robinhood's going to be a no. All right, Mr. Incredible, no to Macy's. I'd like to get your reasoning, but could I give you money to invest for me? Ethan, sure you could, but I suggest you actually, fly to meet me. There's 22 other people pretending to be me. Okay, so I do invest money for people. I do, but I'm very picky on who I invest for. Okay, you actually have to have a relationship with me. There's one guy I'm going to be doing his for him. I've known him for over a year, and he's actually seen what I have done for over a year. Okay, so it took him a year to convince me to trade his money for him. So yeah, I would do it, but it's not that quick and not that easy. If it gaps down tomorrow, okay, board. I'm not going to agree with you. Sorry. 72 hours or less. No to Macy's. Okay, Mr. Incredible, I'm kind of curious. Why do you think no to Macy's? I'm just curious. What stock is that? It's Macy's. Macy's is going down because they are reporting earnings tomorrow. Okay, but I still own it. I have no problem whatsoever. Can you do Peggy? Really? You want me to do Peggy? All right, let's take a look at Peggy for J. P-E-G-I. I like saying, what the hell were you thinking of, people? P-E-G-I. No option. Really, dude? Okay, who said Peggy? J? Really? P-E-G-Y? First of all, it has no options. Second of all, it's having a hard time even finding the data for it. What the hell are you thinking? Sorry. Somebody wanted to look at Macy's and Kohl's. Was it Kohl's? Kohl's. K-S-S. Two of my favorites. All right, first thing I want to look at on Kohl's is what can I buy it for? 26.63. The 26.50s, more than 1%. I like that, more than 1%. Okay. So let's take a look at the chart, see what the chart tells us. First thing I want to see is where's the high of the year? Way back here in August. Where's the bottom of the year? Here in October. Okay, what's the stock done? Well, it went up, it went down. It went up, pull back, up, pull back, up, pull back. Look at all the movement. It goes up, it goes down. Every stock does the exact same thing. It goes up, it goes down. But where are we currently? What is it going to do in the next 4 to 5 days? Because remember, I like doing weekly options. This weekly option here expires this Friday. What kind of rate of return can I get between tomorrow morning and next Friday? I look for 1% per week. Well, let's see if Kohl's will give me my 1% that I'm looking for. Okay, it already will give me, because we already looked at the numbers. It's already going to give me the 1%, the numbers. But is it the right time based on the chart, based on the movement? Because here, the movement, the highs and the lows, that is dictated by you and me, the buyers and sellers. We say, wait a second, it ain't worth 30 bucks because it ain't worth 30 bucks. It's never hit 30 bucks at all this year. Look, up here, 29.70. Here, 29.50. Here, about 29.60. Okay, it didn't hit 30 all year long. So we know it's not worth 30 bucks. But now, see how low it goes. Well, 18, it's like 17.50 is the lowest it's gone all year. So we know it's worth somewhere between $17.50 and 30 bucks. Right now, it just so happens to be at 26.16. That's where it is now. Well, let's continue to look a little bit deeper. The last 90 days. All right, so the last 3 months, last 90 days. Okay, we are somewhere around 27.50. Our high of the 90-day period is right here, 29.50. She dropped all the way down to 21.50, back up, a little bit sideways, a little bit up here, pulls back 2 days to the upside. Perfect opportunity to jump in tomorrow. Okay, you got a high here, pulls back, got a bottom there, 2 green days in a row. I like to do green days in a row coming off of a low. I do. Well, because that means the direction is changing. All right, she goes up, gets to a point where we, the buyers and sellers, say, no, it ain't worth that. And then she drops and said, wait a second, I can buy this at 23, 22, 24. So yeah, I want to buy some. Well, where is that point? Well, apparently that point's right here at 25.10. Okay, 2 days to the upside. Let's see what she's going to look like in the 30-day chart. Okay, so 30 days ago, we're at our 30-day bottom. Okay, she goes up 3 days, pulls back, goes up, pulls back, up, pulls back, up, pulls back. What's she going to do next? Goes up. Okay, up, pull back, up, pull back, up, pull back, up, pull back. That's all she's been doing. Okay? I like it where it is. We got the 28.50 high. It's at 26. I can get 4 more days to the upside. 4 more days to the upside. Maybe she'll be at 27 or 27.50 by Friday. Based on the movement. Take a look at the movement, because the movement will tell you what the public, the buyers, that's you and I. You and I are the buyers. When we buy, we decide what is too high and what is too low. Right? So, I like Macy's, I like Kohl's. Both of them worked out just fine. Will Zim start dividends again? I have no idea. If anyone wants to see the chart better, go to the 10-Minute Trader on YouTube. Thanks, Al. I always count on some of you guys doing that work. What else are we looking at? I think we get a correction this week. Monty, I honestly don't know. Really, I don't. But I'll ask you this question here, Monty. If you've taken a look at the stock market from 1900, 1899, 1900, 1901, whatever, to present day, okay? That whole 120-year period from 1900 to today, 2024. Okay? Every single decade, every 10 years, we have a pullback, we have a recession, we have a downturn, whatever you want to call it. Every decade. But it always comes back. Why? Well, what are we Americans going to do afterwards? So you have a pullback, so you have a recession, so you have whatever's happening in the world, in the economy. Do you honestly think your neighbor's going to wake up in the morning and say, yeah, I don't feel like going to work today? No, it doesn't happen that way. We get up, we feel compelled to go out to our car, jump in our car, and drive to work and put in our 40 hours a week. That's what we do. Okay? Now, is there a recession coming? Maybe there is, maybe there isn't. But do you think people are still going to go to work? Of course they are. Do you remember '08 when the financial market fell apart and everybody was screaming, oh, the world's going to end? Yeah, big deal. We all went to work. Okay? I was down here in Sarasota at the time. And I lost a shit ton of money that time frame. Yeah, I did. But what was interesting about that time frame, although the real estate market and the financial market was kind of weird, you go to the shopping plaza, and the shopping plazas are full. People are out there buying stuff, selling stuff. People are continuing going to work. No matter what happened in the economy, even during Iraq, Iran, Afghanistan, Desert Storm, people were still going to work. That's what we do. We go to work. And then we buy shit and we sell shit. That's what we do. It's an economy. We just keep on going. I mean, yeah. All right, so what? There's going to be a recession. Big deal. People are still going to go to work. Stocks are still going to go up. Stocks are still going to go down. Money doesn't disappear. It just goes from one hand to the next. All right, so what can we look at next? Sorry, Monty, you think it's a correction? Whatever. Careful, we're going into recession. Now, another one. Okay, so the funny thing is, once you say we're going into recession, are we or are we not? Does it really matter? If you say it enough, if you repeat it enough to enough people, eventually this person is going to say it, and then that person is going to say it, and that person is going to say it, then that person is going to say it, and that. So whether it's true or not, the rumor starts, and then it just escalates, and then it just keeps on going. And then people like you, Monty and Patrick, say, oh, we're going to have a recession, oh, we're going to have a pullback. And then you start convincing other people that we're going to have a pullback or we're going to have a recession. And then those people aren't going to spend their money like they normally do. So whether we have one or not is really irrelevant. I don't see Coca-Cola going out of business. I don't see Ford closing down. I don't see Macy's, Nordstrom's, Kohl's, any of those companies closing down just because we have a minor setback. Okay, we've been in the stock market since the 1900s. What have we seen since 1900? We've seen World War I. We've seen World War II. We've seen Korea. We've seen Vietnam. We've seen the Great Depression. We've seen the stock market crash. We've seen all that crap, the oil embargo in the 70s. We've seen that super inflation. We've seen Y2K. We've seen a dot-com bust. We've seen the meltdown, the financial meltdown in '08. We've seen the pandemic in 2021, where the world shut down. But you want to know something funny? Coca-Cola, Macy's, Nordstrom's. I can list off dozens and dozens and dozens of companies that have continuously increased their dividends all throughout all that bullshit since the early 1900s. They're not going anywhere. General Electric has been in business for over 100 years. Consolidated Edison has been in business for over 200 years. Okay? The stock market has been around for 426 years. 426 years. Okay? It's not going anywhere. People are going to continue to wake up, get up in the morning, kiss their wife goodbye, honey, I'll see you later on tonight, I'm going to work. They're going to keep on doing it. If you say there's going to be a recession, if you say there's going to be a recession, well, of course there's going to be, because you keep repeating it. You keep repeating it enough times, enough people are going to listen to it, and then some people are going to start to believe it. Whether it's true or not is irrelevant. It depends on how you look at it. You have enough people saying the same thing over and over again, yeah, it's going to happen. But me, I'm a firm believer that people are going to continue going to work regardless. Okay? I worked every single day during the pandemic. Okay? During '08, I worked. Stock market crashed. Everything lost what? Between 50 to 70% of its valuation in '08, but those companies I look at continuously increase their dividends, even throughout all that crap. All right, let's go. Pan W. I have no idea what Pan W is. Yeah, Kelly, we've been waiting on the recession for a while. I don't think it's coming. I missed a lot of these questions. It's called a correction. Can you explain how to do weeklies exactly? I'm new to this. Well, user 282445169975563. What the hell were your parents thinking when they named you that? I mean, really. Weekly, simple. Weeklies are simple. Okay, first thing you want to take a look at. You put a stock symbol in. Okay? Stock symbol in. Over here is the chart. It will tell you what the stock is doing. Okay, it depends what you want to look at. 1 year chart, 5 year chart, 30-day chart, 30-minute chart, 1 hour chart. They have charts for everything. Seriously, they do. Whatever stock you're thinking of, you put it up here where it says stock symbol. Okay, put it right there. And it gives you all the numbers. This is the last traded price on the previous trading day, which would have been today at 4 o'clock, the last traded price. The bid, if I own it and I want to sell it, this is what I can expect to get, $25.96. Now, if I want to buy it and I don't own it already, this is what I can look toward paying. The ask, the bid and the ask. You always have the numbers go together, the bid and the ask. Okay, volume. How many shares have traded today? The open, what did it open at? Well, what does that mean? Well, the market maker opens up at 9:30 a.m. All right, we're open for business. The price for Kohl's is $25.80. Okay. Oh, look at this. I got a heart. Thank you. That was nice. Open at $25.80. The high of the day was $26.42. The low of the day was $25.78. Okay, that gives you all the information on the stock right there. Now, I like to do what is called a covered call, one of the safest trading strategies that is, and it allows me to collect a safe, predictable, consistent 1% per week. You heard me right, 1% per week. That's over 50% per year. How do I do that? Well, I concentrate only on companies that are good companies, in my humble opinion. Okay? This is just my humble opinion. You know, don't believe a damn word I say. Go do your own research. It's really not that difficult. Okay? I only look at companies that have increased their dividends for 20 years or more. Why? Well, if you increase your dividends for 20 consecutive years, well, there's a couple of things that go along with it. Number one, you've been in business long enough to do so. That's one good thing. Number two, usually you're 50 years or older. When you get to that point, you basically set in your ways. After 10 years, okay, what do they say? 4 out of 5 companies fold after the first 5 years, and then 1 out of 100 fold after the first 10 years. So you get 20 years of increased dividends. You have some kind of longevity to it, and you have some kind of historical performance. Okay, great. That's rule number one. 20 years of increased dividends. Number two, weekly options available. What does that mean? Weekly options. Well, an option is basically, if I buy the stock, okay, remember, back to here, back to the stock price, at $26.63. That means I own it for as long as I buy it. Okay, first thing tomorrow morning, whatever I buy it for, that is going to be my entry price. That is going to be the price that I choose. Now, this number is going to change like every fraction of a second all day between 9:30 in the morning when the market opens and 4 o'clock in the afternoon when the market closes. From the time it opens to the time it closes, it's like throwing a dart at a dartboard on a moving train. It just, you have no idea where it's going to go. It's going to be roughly in this area though, 26.63. That's what the market maker said. Okay, so how do I do weeklies? Well, first of all, I have to pick a stock that has a weekly option available. Okay, this down here is what is called the option chain. Okay, so if I buy it at 26.63, I can sell somebody the rights to buy it from me. That's kind of like buying a house and renting it. You're collecting money on something you already bought. So if I buy the stock at 26.63, I can sell some of the rights to buy it from me or rent it from me or whatever, however you want to call it. Okay, at the moment, the 26.63, the 26 is going for 76 cents per share, and the 26.50s are going for 54 cents per share. The 27s are going for 40 cents per share, and even the 27.50s are going for 25 cents per share. Okay, this is what you're collecting as a option seller. Okay, now you can buy options, you can sell options. I only sell options. There's dozens and dozens of trading strategies out there. You can do any trading strategy you want. I picked this one because it's simple, it's safe, it's predictable, and it's consistent. Okay, now let me quickly tell you why I do this one and how this one came about. Well, let me think. In 2008, when everything went to shit, okay, I was doing real estate at the time. My daughter, who was 9 at the time, wanted to do what I was doing because she wanted to earn her own money, which I thought was great at 9 years old. Okay, fine. So I had to come up with a trading strategy for my 9-year-old daughter. So here's the challenge. Number one, it had to be simple. Number two, it had to be safe. It had to be predictable. It had to be consistent, and there's no way that she could possibly lose. That's the 5 criteria. 5 criteria I had to figure out for my 9-year-old daughter. Okay, so simple. I came up with some rules. Number one, never buy something you don't want to hold long term. What do I mean by that? Well, if you don't understand what the company does, if you don't understand anything at all about the company, well, don't freaking buy it. Don't buy something you don't understand and you don't want to hold long term, because you just might have to. I mean, that's what you're doing when you're investing. You're giving your money to someone else, and they're going to use it, and they're going to return it back to you with profits. That's what I'm looking for. I'm looking for safe, predictable, consistent profits, 1% per week. To do that, the company has to have 20 years or more of increased dividends, and it has to have weekly options available. Okay, so out of the 9,516 companies, the reason why I know this number is because we looked it up 2 weeks ago. The number might be different now, it might be higher, it might be lower, but roughly around 9,516. 2 weeks ago, that's what the number was. Out of all those companies, there's only about 300, which is 97% don't make the cut. So only 3% make the cut. Okay, so I take all those companies and I throw them into a calendar. Why? Well, I want to know exactly when they're paying out their dividend. Because if each and every one of these companies that increase their dividends to 20 years or more, and they have weekly options, I want to go in and I want to take a look at them. It's Johnson & Johnson, Wells Fargo, 3M, KeyBank, Dow, QCOM, General Electric, Goldman Sachs. I mean, you heard of all these companies. Each and every one of these would give me more than 1% if everything is correct. Well, what do I mean by that? Well, first thing I want to look at is I want to look at the numbers. Okay, what can I buy it for? What can I sell it or lease it or rent it to someone else for? Right now, the 26.63, the closest one is the 26.50. The 26.50 is giving me 54 cents per share. I know that's not a lot, but I know 54 cents is more than 1%, 26 bucks. So I'm getting more than 1% on this company here, on Kohl's. Okay, great. So the numbers work. Big deal. What next? Well, I'll tell you what next. Next, we want to look at where's the stock moving? Where's it going? Where is the high? Ooh, that hurts. Oh, man, that did hurt. Okay, where's the high of the year? This is the 1-year chart. First thing I want to look at, the 1-year chart. Where's the high of the year? Where's the low of the year? Where was it a year ago? Where is it now? Okay, it takes less than 2 seconds. Okay, high, low. Where was it? Where is it? It doesn't take long at all. Now, I want to take a look at the 90-day chart.
Okay, this is the last 90 days, so the last 3 months. Okay, first thing, high, low, where was it? Where is it? First things I want to see. High, low, where was it? Where is it? Really not that difficult. Okay, then I want to take a look at the 30-day chart because I want to see the movement. Okay, look, she's going sideways here. She dips, backs up, big drop, back up, sideways, back up, dips, back up. That's the 90-day. I want to see what the 30-day chart looks like because I'm going to try to guess. Okay, I'm going to try to guess. Look at this: up, down, up, down, up, down, up. Okay, I'm going to try to guess where's it going to be by Friday. Why? If I buy it tomorrow morning at 26.16, I sell someone the rights to buy it from me at 26.50, and I make more than my 1%. That's what I'm looking for. Companies that offer me 1% every week. So if I'm doing that, okay, if this thing is bouncing off, see that high, you can't. I don't make this shit up. You know, these are the numbers. These are the charts. I'm just reading them. I suggest you do your own research. I'm saying Kohl's, KSS. What's the price? Okay, what does this chart looks like? What is it telling you? Okay, it's telling you this is where it was 30 days ago. It went up, it came down, up, it came down. It went up, okay, made a new 30-day high right there. Okay, a bottom right there, not a 30-day bottom, but it came down. It came down 2 days, 3 days. Okay, so it's here, 1 day down, 2 day down, 3 day down, right here. Okay, green day, time to jump in. Okay, it's giving me my 1%. It's called correction, Albert. Yes, it probably is. Can you explain how the weeklies exactly? I'm pretty sure that was it. Okay, so as you can see, 24 May 24th, that's this Friday. 31 May 24th, that's next Friday. 7 June 24th, that's 3 Fridays away. And so on and so forth. Every 7 days, they have an option that if I buy the stock, I can sell somebody the rights to buy it from me for the exact same price. If all the numbers look right, if it's going in the correct direction, do I want to buy it up here? Hell no, I don't want to buy it up here. I want to buy it when it comes off of that, finds a bottom, turns around. Because there's only one 30-day top, and there's only one 30-day bottom. When it finds its top, okay, we buyers and sellers, oh hell no, it ain't worth 29 bucks. We've already discussed this. We looked at the 1-year chart, we looked at the 90-day chart. Okay, it's not worth 30 bucks. We've already figured that out. All right, so here's the high, it drops down, and then all right, 25 bucks. Wait a minute, Kohl's at 25 bucks? Yeah, Kohl's is worth more than 25 bucks, so I buy it. So it goes up, I grab that 1%. Thank you very much. I'll see you again in a couple of weeks when when everything else looks good. All right, Terry, you're back again. Terry, we're going to take a look at Verizon. You ready? That was Kohl's. Somebody want to take a look at Kohl's and Macy's, so that was VZ, Verizon. Okay, very first thing I want to look at, Terry, Verizon, VZ, 4016. Okay, 4016 is only going 38 cents a share. That's not even 1%, dude. Sorry. Don't get me wrong. I love Verizon. I do. But not this week. Why? Well, 4016 in the 40s is going for 38. It's not even 1%. And the chart looks kind of okay. Okay, you get your 30-day high here. Okay, your 30-day high here, your 30-day bottom here, pulled up, came back, pulled up, now it's coming down. Only 1 day to the upside. Still not even 1% though. Sorry. It's normal and healthy. Yep. Big Daddy. Recession, great for stock market. Money on the market. Yep. Kelly, been waiting for the recession for 2 years. Yeah, me too. I'll short everything. Yeah, I wouldn't do that. Sometimes it's not action, reaction. Sometimes people create the reaction on purpose. That is correct, Lena. I'm going to agree with you. Albert, it's a good time to buy when that happens. Okay, correct again. Lena? Pan Am, TWA, I remember GE at $5. It's called manifestation. Okay.
Iron Mountain's going to be a no. What about Fisker? Ooh, what's the ticker symbol for Fisker? Iron Mountain's not does not have 20 years of increased dividends. What do I think about Shell? Why don't people like you get real jobs, like a job producing something? Everyday Mark. Ooh, everyday Mark. I'd like to challenge you there for a minute, buddy. Number one, I'm 60 years old. Number two, I've had a real job since I was 13. I've owned a manufacturing company. I've had 26 employees. I've done my bit for society. I'm 60. I'm retired. I take the money that I have. I earn a very nice, comfortable 1% per week. I thought it would be nice of me to share what I know with other people. Now, there's a lot of people on here that have been here every single night since January when I started. They appreciate what I do immensely. So why don't I get a real job? I had one. Okay? I put my time in. And you, nor anyone else, is going to tell me how I should run my life. I put my time in. I have no reason to do anything for anyone else but myself and my children. Okay? So, everyday Mark. Don't know what to tell you. What do I think about Shell?
S-H-E-L. S-H-E-L. Oops. Shell 7159. Ugh. Yeah. Okay. So,
How about I pick on you just a little bit more, everyday Mark? Okay? Just a little bit more, just a smidge. So, I'm kind of curious. Okay? People like me, okay, who is sharing a trading strategy with strangers online. There's an average between 7,000 and 21,000 people a night come by and see my little, whatever you want to call this. Okay, some people take advantage of it. Some people use the information. Do you know of any other place where somebody shares information for free on how to invest to get a safe, secure, predictable, consistent 1% per week, which is over 50% per year? Am I asking anything in return? No. I'm just sharing information that I feel compelled that people might, thanks for that, that was cute, that might be interested in learning. So my question to you is, if you don't think I'm worthy of your time, then why are you here? Okay? If you don't have something nice to say, don't say anything at all. Why go through the effort just to piss someone off? Which you really can't piss me off because I deal with people like you every day. You don't like it, you don't have to be here. You got 200 people here at the moment, okay? Now, on average, anywhere between, like I said, between 7,000 and 20,000 people come on a daily basis, on a nightly basis. They come to see what I'm doing. Okay, so some people appreciate it, some people don't. I can't satisfy anyone. You don't like it, you don't need to be here. But if you know another place where average person could get information for free on how to invest their money and get a safe, predictable, consistent 1% per week, which is over 50% per year, I'm more than glad to quit what I am doing and have you pass along that information to everyone so I can save myself the effort and I'll just do it on my own. I'm just kind of curious if you're actually going to have a comment or are you going to pansy it up and run? Uh-oh. I forget where were we. Damn it, I didn't get to see. Everyday Merc just doesn't understand. Okay. Stocks up tomorrow. Everyday Merc. What if everybody had that mindset? Who would make things? Dude, the mindset that I have, get a job when you're 13, put 40 years of hard work in. Okay, I get up at the sunrise. The sun gets up, I'm up. I'm off to work. I was 13 years old when I was out chopping wood and working on a farm. Okay? Now, the other people are working longer than I have. At 60 years old, I have the opportunity. I have enough money. Okay, fine. I can live comfortably off of it. All right, I'm done. Okay, if everybody had that philosophy, yeah, let's put in 40 years of work, good constructive work. Okay, I've done carpentry, I've done plumbing, I've done roofing,
I've done landscaping. I've done manufacturing. I had my own manufacturing company for a few years. I've done food service. Okay, I've done a shit ton of work. And I don't need someone like you to tell me how I should live my life. But you're 100% correct. Listen, man, I have no idea what we're talking about. I've been here 3 days and learned a lot. Well, alrighty then. Now, some people, believe it or not, some people have been here since January. Now, why do I say that? Well, because I first learned that someone was stupid enough to put a camera in front of me and say, hey, you have an audience now, here you go. So great. And people just keep on coming back. So great. So I have something to say. People want to hear it, fine. You don't want to hear it, you don't have to be here. Does it make sense? Number one, does what I say make sense? Can you use it? Even if you can't use it, does it make sense? Shell Corporation. Do we know who Shell is? Yeah, we know who Shell is. Well, let's take a look at the numbers. Shell, $74 at 74. Yeah, no, it doesn't work. It doesn't cut it for this week. It's not saying that Shell's a bad company. It's just saying that the numbers this week don't look right. Because the last trade was 71.59. The bid, 71.20. The ask, 74. That's a big pricing difference. So tomorrow, when the market opens, this spread here is going to be a lot different because it's usually at 3.8 million shares, it's usually going to be a 2-cent spread. So at a 2-cent spread, it'd be closer to 71.50 and the 71 going for 85 cents. Yeah, it's still not making it. Everyday Merc just doesn't understand. Okay. Our website used AI to get the latest and best news. Stocks of tomorrow. Well, that's cool. I don't really do news. Thank you for your teaching us. Knowledge is power. Well, not necessarily. I'm going to say unused knowledge is useless. But if you can use it, great. Nike, you want to take a look. Gallant, you want to take a look at Nike. Do you have an ebook? I have 13 of them with step by step. Maya Cruz. Is that Mia Cruz or Maya Cruz? Yeah, I have I've written 14 books. Okay, most of them you can find if you go up here to the top left, where that is the what do you call that damn thing? The bio up here in the left corner, top left corner. Click on that, that'll take you to the website. The website looks a little bit like this. All right, so here's the website, The 10-Minute Trader. Because if you ever heard any of my videos, I have about 400 or 500 of them. Hey, this is James from Dividend Stock Talk, brought to you by The 10-Minute Trader. The 10-Minute Trader. So I've had this website for almost 20 years. Okay? Dividend stocks up to 50% annual returns. Simple, safe, consistent, and predictable. If you're looking to strike it rich overnight, you're in the wrong place. It says it right there. If you're looking to strike it rich overnight, this ain't it. My main focus is a safe, consistent, and predictable 1% per week. It's right there on the website. Okay, you slide down a little bit. The first video gives you a rough idea of what we're doing, basically what I'm talking about here. The next video explains to you what do I mean by no risk trading. Well, what I mean by no risk trading, do you really picture a world where Ford, General Motors, Coca-Cola, Procter & Gamble, and all these companies are no longer around? I can't see it. Did you think Coca-Cola's going to stop making Coca-Cola or Pepsi's going to stop making Pepsi? Hell no, they're going to continue doing the same thing. But that's what I mean by no risk. Well, there's always a risk. Yeah, Coca-Cola could fall into the abyss and just disappear overnight. It could, right? But it's not guaranteed. All right. But it could. All right, no risk. Okay, underneath that, here's the link to our live trading. Like I said before, we do have live trading Monday, Tuesday, Wednesday, Thursday. Friday or on in the afternoon. Underneath that, you have all the little doodads, okay? YouTube channel, Twitter, Facebook, Instagram, podcast, LinkedIn, Patreon, TikTok. Books by James. You click on Books by James. That will take you to here. All right, here they are. There's 1, 2, 3, 4, 5, 6, 7, 8, 9. There's 14 of them. Okay, underneath that, you'll find all my trades. All the trades I have done all year long. From week number 1, where's week number 1? Week number 1, I have 2 accounts that I share with you openly. Week number 1's all cash, 2.12, week number 1. This one's a margin account, 2.38, week number 1, week number 2, week number 2, so on and so forth. Everything's there. Check the numbers yourself. I'm not hiding anything. But we're down to 100 people. Holy cow, that's not good. Okay, so Shell's not going to do it. Sorry. Nike, go on. You want to take a look at Nike? All right. NKE. Oh, fuck. 91.77. The closest one's going to be the 92. The 92 is coming in for 82 cents, dude. Sorry. Sorry, go on. 82 cents just doesn't cut the mustard. Carol Gore, thank you for sending that. That's nice of you. Lena, thank you. Lena, I just said Outlook. I feel like I'm in an online class. I don't know if that's good or bad, Lena. Lena. Or is it Leanna? I don't know. You get to hang out with us. Yeah, we appreciate you giving back. Thank you. Can I ask you what 1% per week comes out to? Well, it's an interesting question. Okay. What is 1%? Well, 1% is half amount is 2%. All right, I'll give you for instance. Are you ready? All right, are you ready? What is 1%? Okay, ready? Is it Hunter Man? All right, Hunter Man, you ready? 1%. Current trades for 2024. This is on the 10-minute trader. Halfway down, you'll see this. Account number 1. Okay, I started at count number 1 at $117,000. Okay, account number 1, $117,000. This is all cash. Okay, this account over here. Okay, 100,000 cash, 100,000 margin. What does that mean? Margin is borrowed money. Why do I have 2 accounts? One, I suggest nobody does a margin account until you understand what the risks are. Because this is borrowed money. I have to pay interest on that money. Well, why do I do it? Well, I do it because I've been doing it for a long period of time. I understand the risks. I'm what you might want to call an expert, because they say once you've been doing it for 10,000 hours, then you're an expert. So, not that I say that I am, just people say that I am. Okay, so what is 1% of $117,000? 1% of $117,000 is $1,100. So, do I make $1,100 a week? This one here, 1% on 200,000 is $2,000 a week. Okay, but this is margin. Remember, I have to pay that money back. So let's see what we have. Week number 1. CVS, General Motors, Southwest Airlines, Comcast, and Ford. Okay, so 1,000 shares, 10 contracts. That one trade right there. Check it out. That one trade right there. Buy 1,000 CVS, $79.49. Sell 10 contracts. The 79 call at $1.02 per share. That one trade. This one trade right here is $1,020. Okay, so on count number 2, $1,020. That one trade, just that one trade. Okay, the next one, General Motors, 1,000 shares, 10 contracts, 37 cents a share. 37 cents a share is $370. Okay, so you have $1,000, $370. The next one, 2,000 shares of Southwest Airlines. Okay, $28.96, 39 cents per share. Okay, 39 cents per share. 2,000 shares at 39 cents per share. What is it? 690. That's 800. That's almost $800. Okay. 39 cents times 1,000 is 390. 39 cents times 2,000 is 780. Okay, so 1,000, 370, 780. This one right here, 600 shares at 32. What is that? $180. And then the last one, $30. So you have 1,000, 370, just under 800, and just around 300. So that's over $2,000 right there on this one week, first week of January. The very first trade, check it out. 1,000 shares at $1 per share. That's $1,000. So what's 1% of 100,000? Well, that's $1,000. Okay? Because remember, this account here has 100,000 in cash and 100,000 in option. 100,000 in margin. Okay, and it made for the week 2.38%. So that was $2,300, almost $2,400. This one right here, 2.12. Week number 2, 1.3. Week number 2, 2.5. So on and so forth. So what is it? At 50,000, 1% would be $500. At 10,000, $100 would be 1%. So 1% is 1%. Let's get out of there. All right, we're at 11. All right, we're going to reboot real quick. Don't go anywhere. Don't go anywhere, we're going to reboot. All right. Andrew Berry liked the video. Oh, shit, that hurts. Oh, I'm going to sit down for a minute. Oh, yeah, that's much better. All right, we're back again. Well, I got to reboot every once in a while. It keeps things fresh. Ochus, Florida. Roj, you're back. How you doing? No ad. No ad sad. Okay. Jim Cox, more like the track. Where do you like the call expiration date? Where do you like the call expiration date to the EX date? Does it have to be after the EX? No. Roj, I like to buy before the EX date. I think we had a conversation about the 2 weeks before the EX date. Jimmy, how you doing? Coral's here. All right, Anthony, where do you go, Anthony? 99999 joined. Where'd he go? I gotta do something about that phone for Instagram. Just not getting a good connection over there. I don't know what it is. That's buy, I mean to sell. Okay. Okay, Roj, go on. All right. So we're at 93, moving up, like the live. Thanks. Christian, R joined. Mama said, knock you out. Do premiums fluctuate during the trade? Yes, they do. Well, every morning we have that same challenge. Okay, every morning, okay, we're buying stocks and we're selling the options against them. And as we're selling options against them, the option value goes higher and lower, higher and lower, higher and lower. And it's like you're throwing a dart at a moving train. So you're hoping to get a good fill. Or you could do a limit order and that can fill whatever it fills. There's no guarantee with limit orders. Okay, the only guarantee you get is with market orders. All right, so you're at 157. Cool. Well, what do we want to take a look at now? Let's open up and see what kind of options we have. Okay, we looked at a couple of decent ones. Now, I did buy some Halliburton today. Once it's filled, does it change? Yeah, it changes as long as how about Abbott? Is it a monthly or weekly? Abbott Labs is a weekly, Katie. Dow. Which is the best stock to trade in ATM? That's a good question. Some comments in life have been blah, blah, blah. If you make so much, why aren't you in your pool? Whatever makes you think I have a pool. X System X31. I like it when people try to tell me how to spend my own money, okay? I make enough to live comfortably. Selena, good evening, my friend. How are you? Okay. How do you decide on what to buy? Evan, I decide on what to buy by the calendar. I'll show you that in a second. Rock magnet. Howdy, James. Can you recommend a good primer to learn about options, trading, and books, articles, website? You know what a really good book is? The Wall Street Money Machine by Wade Cook. That was a cool book. That's what basically got me started. I was reading it. It's like, holy cow, that can't be real. So I learned it from someone else. I was joking. All right, good for you. About the pool scenario. All right, Terry, we already looked at Verizon. We already did. We looked at Verizon. Verizon was a no for this week. Okay? Now, just to let you know, X System X31, I am gearing up to buy a nice big fat yacht and then go cruise the Caribbean for a couple of months. But that's my latest entity I'm looking for. A nice big boat, probably on 50, 60 foot. Something big enough for me and the missus just to kick back, relax, and do a lot of snorkeling, diving, and just a lot of nothing. All right. Sorry about that, Terry. We did look at Verizon already. Lena, 3M. $3M is coming in at 105. And the 105s are going for 81 cents. Now, don't get me wrong. If you like 3M, okay, it's like 0.75%. It's not 1%, but it's 3/4. Do you fish? No, I don't, Bobby. Sorry about that. I was a fisherman when I was in my teenage years. Okay, you bait 2,000 hooks by hand by 5 a.m. in the morning, then come to me talk about fishing. Yup. All right. Thanks for putting up with the turds so the rest of us can learn something. Hey, you guys, you know what? They say if you don't have enough turds in your life, you're not working hard enough. I think the most turds I've ever had to delete in one night was 7. 7. I haven't deleted anyone at all tonight. So I had to actually stop what I was doing and delete them. What happened to G-Wave? G-Wave has been a no since the first time someone suggested it. Okay? GWAV. There's your answer right there. See it? No options. Okay, so not only am I not getting a dividend, I'm not able to do a covered call against it. So where am I getting my cash flow from? Stock appreciation? Well, it's at 15 cents at the moment. I'm 60 years old. You really think I want to put a couple $1,000 into a 15-cent stock and wait 10 or 15 years to get something out of it? No, I don't. Okay? There's too many stocks already available that will give me a safe, predictable, consistent 1% per week. Why would I bother messing around with this kind of crap? Sorry, it may not be crap. Green Wave Technology, they may be a great company. They may be some of the nicest, friendliest people on the planet. Great. I'll see you in 20 years when you make my list. It's actually really that simple. There's 9,516 companies to choose from. Why would I choose something like that? Yeah, boo boo. Boo boo 510, I'm all jazzed up. And I say, some people get me all worked out because what platform do you use? This is Thinkorswim. You can download this for free online. Go to thinkorswim.com, download this version. LPG. I made 500 today, not 20 years, on a penny stock. Well, alrighty then. I don't do that crap. Really, I don't. I did it years ago. Okay? Seriously, I did it years ago. If you can think of a way of investing, I have probably done it.
Okay, I've looked at coins, I've looked at stamps, I've looked at art, I've looked at cars, I've looked at real estate. Yeah, Lena, think or swim. That's correct. I've done all that stuff. I've done penny stocks. I've done day trading. I've done what do you call that other one? You sit in front of the computer for hours. Forex. I've done all of it. Big Cat, how you doing? NCLH. Big Cat, you really want me to pick on you?
NCLH. NCLH. Norwegian Cruise Line. Interesting. $16.99, 17 is going for 27 cents.
That is over 1%. Cool. Well, let's take a look.
Now, I'm going to open up Yahoo Finance.
What was that ticker symbol again? Black Dag is in pre-sale at a price of, okay, and will surpass Litecoin, which is currently, okay. I don't do cryptocurrency, so I don't know why you're telling me this. NCLH.
NCLH. Norwegian Cruise Line. All right. Sorry, dude. Norwegian Cruise Line. There are no dividends in the selected time frame.
Why would I do a company that doesn't, Big Cat, why would I do Norwegian cruise lines if they don't offer a dividend? Seriously, when the stock goes down, what am I getting? Nothing. Stocks go up, stocks go down. When a stock goes down, I want to collect something. Okay, my money, I want to collect something every week, every month, every year. Okay, Norwegian Cruise Line is not giving squat. So, no, sorry. What do we have next? TQQQQQQQ. All right. My favorite stock to trade, quadruple X. Really?
TQQQ. All right.
TQ is going to be a no.
Not because of the numbers. Okay, look. 64, the 64 is paying 161.
I seriously doubt they pay dividends, but I'm not going to bother with that.
But it's going to be a no because
it's at the high of the year right now. You're standing on a ladder waiting for someone to come and bring you a taller ladder so you can get higher. Okay, it may go up, but it's never been there before. Well, at least not this year it hasn't.
So why would I put my money into a stock where it's
never been? I don't want to take that gamble. Seriously, I don't. I'm not looking for capital appreciation.
I'm looking for the 30-day bottom. Okay, previous 30-day high is right here. Here's your 30-day bottom here. That's where I want to get in. 2 days to the upside, right there. Look at that run.
Okay, I don't like buying at the tops because there's no guarantee it's going to continue to go up.
But you know what you get when you have a 30-day bottom and she starts moving up?
You can only have one 30-day bottom.
I mean, this 30-day top,
we can have another 30-day top tomorrow, and another one tomorrow, and one day after that, so on and so forth.
You don't know if it's going to go higher. And look where the 30-day bottom is. Okay, 49, and look where this is, 64. That's a lot of space between the 30-day bottom and the current high. That means there's a lot of people here saying, all right,
when am I going to take my profits? I don't want to be in that situation. Sorry, that's just me.
So somebody wanted to take a look at my favorite stock, XXXX. I've never heard of it before. Bank of Montreal.
No. No options available. Again, if it doesn't have options, I can't do covered calls against it. I can't do nothing but collect premiums
or dividends. And look where she is. No options means it's a no.
Sorry, dude. Who said that one? Mark Smith. Sorry, Mark. Okay. Quadruple X is not paying dividends, so it's going to be a no. Okay, would you agree that everyone has their own strategy, and if it works, they should keep doing it? Boo Boo, I'm going to agree with you 100%. If you're doing something and you're okay with it and it works for you, fine, keep doing it. What the hell do I know? I don't know anything. Okay? All I know is I like a safe, predictable, consistent 1% per week. That's my trading strategy. It's simple, it's safe, it's predictable, and it's consistent. And it's been working for me for over 15 years. But I am going to agree with you, Boo Boo. I missed that. Dude doesn't even know what TQQQ is. Oh, really?
You really want to go on TQQQ? Really? TQQQ. Okay. ETF, I know that. Look where it is. It's at the high of the year. So whether I know what it is or not, I do know it's at a high of the year. Okay? Now, if I'm buying it at 64.10, I sell the 64s, yeah, I'm getting way over 1%. But here's the thing. Let's take a look at the actual, what the hell is in this EQQQ that you speak so highly of. All right, Mr. TQQQ, I know what I'm talking about. Number one, why would I buy this piece of crap? Look at it. 2014, 0 dividends. 2015, 0 dividends. 2018, 1 cent. Nothing 16, nothing 17. 18, 1 cent. Paid it once. 2019, 1 cent. Didn't even go up. Nothing in 2020, nothing in 2021. 1 dividend, 10 cents in 2022. 2023, 15 cents, 13 cents, 14 cents, 22, and 2020. Yeah. Okay, so why would I buy that piece of crap? 20 years or more of increased dividends. The reason why I don't buy this crap is because it's crap. Okay, you may think it's wonderful. Nothing wrong with it. I'm not disagreeing with you. I'm just saying, for me, it's a no. Why is it a no for me? Well, right here. There's no consistency in their dividends. Number one. So when the stock goes down, it's not an if, it's a when. When it goes down, what am I collecting? Seriously. You like it so much, what are you collecting when it goes down? You're not collecting a decent dividend. They're not consistent with their increases. So let's go to holdings. What's actually in this turd? Really? It's an ETF that has 2 companies in it, Microsoft and Apple. That's all that's in here? That's it? You gotta be kidding me, really? So your TQQQ, the only thing in TQQ is Microsoft and Apple. That's it. And what are they paying on an yield? Oh, yeah, this is a winner. Are you ready for this one? 62 bucks, the yield. So if I dump all my money into TQQQQ, whatever the fuck it is, I'm getting 1.3% per year. 1.3% for the year. Okay, I showed you how to make 1% safely, predictably, consistently, 1% per week. And you're saying that I don't know what I'm doing because I don't want to put my money into 1.3% piece of crap like this? The only thing in here is Microsoft and what the hell was the other one? Apple. That's the only thing in TQQ. Whatever. Go to the next one. Will, you want to take a look at Wayfair? I can basically tell you it's going to be a no. Because Wayfair doesn't have 20 years of increased dividends. That's WBA. I don't want WBA. Wayfair is W. Wayfair, 61. Okay, sorry, dude. Wayfair has no dividends at all. So it's going to be a no. IGT. International Game Technology. Interesting. Wow. At least this company has dividends. But in Europe, they buy dividends SPY on purpose. Okay, the price accounts for it, but more tax efficiency. Okay, not quite what I'm looking for, but all right. All right, woof. Yield doesn't matter. It's triple the QQQ. All right, that's false. Wolf said I'm false. Okay, hold on a second. Who cares what underlying stock if the underlying stock gives dividends? Oh, Wolf, I do. And that's false. What is false about what I said? T, Q, Q, Q. All right, I put it incorrect. All right, T, Q, Q, Q. Right there, T, Q, Q, Q. All right, there's the dividends. All over the place. Okay? Nothing in 2020, nothing in 2021, only once in 2022. Crap. What's in TQQ? Okay, what is actually in this ETF? Microsoft and Apple. There's only two stocks in this ETF. Microsoft and Apple. Nothing else, just Microsoft and Apple. And the summary. $1.34%. Am I reading it correctly or am I reading it incorrectly? No, Wolf, you're saying I'm incorrect. It says yield 1.34%. Yield is when you buy a stock, what are you getting it at the end of the year? 1.34%. Why am I wrong? All right, TQQ is triple the Qs, but yield doesn't matter. Okay, so why are you investing in the first place? In Europe, they buy dividendless SPY on purpose. The price account for it, but more tax efficiency. I'm not 100% sure what you're talking about, dude. Seriously. Dividends are pointless. It's underlying stock to buybacks. Classic Warren Buffett advice. Okay. The false part was the underlying. Well, underlying, false. Okay, so Yahoo Finance, quote, TQQQ. Holdings, right there. It tells you exactly what's in the account. Click on Holdings, ProShares Ultra Pro QQQ. Top two holdings, Microsoft, Apple. I'm not 100% sure why that's incorrect. stocks, bonds, government rated, blah, 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 ETF summary. The fund vests in financial instruments that ProShare Advisors believes in combination should produce daily returns consistent with the daily targets. The index includes 100 of the largest domestic and international non-financial companies, blah, 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 blah. Okay, you read all that crap, fine, dandy, but the summary is still the same. The summary is still the same. 1.34% per year. So you're investing all your money into this, and it gives you 1.34% per year. Hey, if you're happy with it, more power to you. You were saying ETG. It is a leveraged QQQ. I know exactly what it is. Use a better website. All right. It's like buying elite contracts on QQQ instead of reset leverage daily. I invest for capital appreciation. Well, then there's your problem right there, dude. This is not capital appreciation investing strategy. This is income producing strategy. Income, not capital appreciation. I particularly don't give a rat's ass about capital appreciation. I buy a good quality stock, I sell an option against it, and I look for a consistent, predictable 1% per week. And I've been getting 1% per week for over 15 years. I don't have a problem with it. Stocks that invest in themselves instead of giving out dividends. Yes, I know exactly what capital appreciation is. Can we get past QQQ? Yes, we can. All right. First turd of the day. Bye. I don't want to deal with that crap anymore. Okay. If you want to make a case, you're going to have to provide a source of what you're saying. Okay, Randall, right, at least you can see it my way. Total return is all that matters. Yeah, the total return, 1.36. Yeah, no thank you. Exactly, Wade. What is he trying to prove? It's there. He doesn't like the numbers. I'm terribly sorry. You don't like what I'm showing you. You don't like it. You don't have to be here. Simple as that. I'm going to reboot again. We're down to 55 people. That just doesn't work for me. Let's try rebooting one more time. Let's try this one more time. TQQQ. All right, we're going to try this one more time. Jay, how's it going there, Jay? 1294. Grateful Nat. Tennis. Wade's here. How's it going there, Wade? Guilt Free. Interesting name. Jay Williams. Blackstone Esquire. Cool beans. We're not doing very good over here on YouTube, Facebook, or Instagram. Why is that? I gotta get another phone for Instagram. That was just not working. It's just not working worth a squat. All right, hope you guys have some nice things for me to take a look at. Get a little discouraged by some of those other people. Like, really? All right, now, what is going on? Pause due to poor connection. All right. Scott, how you doing? Bay Love. Rodney Riley. How's it going, Rodney? Alcoa, right? You want to take a look at Alcoa, AA? Okay, Alcoa, 42.80. We want to look at the 43, 64 cents. Ooh, nice pick. How's it going there, Jack? We're gonna take a quick look. Can you look at Dow? All right, Gallant, you want to look at Para? So Dow, D-O-W, and Paramount, P-A-R-A-M-O-U-N-T. All right, let's take a quick look at these. Right now we're looking at Alcoa. All right, we'll take a quick look at Alcoa, right? Alcoa, 42.80. The 43 is going for 64 cents, which is more than 1%, which is what we're looking for. Look at the chart, and we're going to say no because it's at a high of the year. Okay, look at that, high of the year. Sorry, I would wait for a pullback first before I jumped into anything like that. Okay, sorry. Next on the list would be LUV, Southwest Airlines. 28.25 to 28.50s, not quite 1%. Even the 28s, we take off the 25, that's only making 25 cents. Still not doing it. All right, golf first. We're just looking at it right there. LUV, Southwest Airlines. PPBI. Really, Jay? PPBI? PPBI. Pacific Premium. Yeah, that's a no. Sorry, dude. It's a monthly. What does that mean? It means for covered calls, I can only do 12 covered calls. I'm not going to get like 50% per year. Sorry, that just doesn't work for me. All right, next on the list is Cisco, CSCO. 47.14. The 47 is going for 43. That's going to be a no also. MPW went along today at 5 and worked great thus far. All right, Secretary, let's take a quick look at that because I actually bought some of those. Do you usually only look at U.S. stocks? RAM, I will look at any stock that's increased its dividends for more than 20 consecutive years and has a weekly option on it. Do you have anything like that that's not a U.S. stock? Because I know European stocks, you can only exercise them on the day of expiration. Dow is near a 52-week high. Never mind. All right, that works. All right, next on the list. PM, Philip Morris, IWM. Really, Kenny G? IWM. Never heard of it. IWM. That's going to be a no. Okay, it's an ETF. All right, this is the Russell 2000 ETF. It has daily options. Okay, so look, 21 May, that's tomorrow. 22 May, that's Wednesday, Thursday, Friday. So this has options every single day that expire every single day. 208. The 208, even if I bought it tomorrow at 208, the 208 is going for 95 cents. That's not even, that's a 0.5%. That's a 0.5% from the day. So if I bought it at 208, sold off the 208s, I can get 0.5% a day. I don't know, maybe that's something. I don't know, maybe I would take a look at that one. But does it pay dividends though? I don't know. Was just curious of SONE. Namelessly back the truck on KOD. KOD. I'm going to write that one down. IWM. I don't know. Could I predict that one? Yeah, I could predict it's going up higher. iShares by BlackRock. Ooh, that's what we're looking at. I don't know. What do you think? $208.76. If I buy the 208s, I could sell the 209s for 43 cents. That's 0.25%, but that's for the day. Okay, the 208s sell for 95. Take 76 cents off of that. Yeah, now you're better off with the 209s, but you're not going to get 209.
Yeah, no, sorry, that's a daily options. I don't do that one. KOD, no. Premiums are crazy, but bad as lower than last price.
Gallants, let's take a look at Paramount. PARA. 1201, the 12's going for 29. That's over 1%. Okay, let's take a gander at it. Let's get this out of the way. Okay, the high of the year is back here in December. The bottom of the year is here in April. Right now we're at 1202. A year ago we're over here at 15. All right, so the 1 year chart doesn't look that bad. 90 days. Okay, the last 3 months. You ready? Here's the high. Here's your low right here. It was 90 days ago. Here's where it is now. Okay, let's look at the last 30 days. All right, last 30 days. Here we go. Well, here's the high here. Here's the low here. Okay, 30 days ago, we're at 1250. Bottomed out at 1350. Topped out at 1450. Pulled back up. Hit a high here. Now we're down over here. Okay, we're tied for the low right there. See that? So tomorrow, I like 2 days to the upside. So it won't be tomorrow. It might be Wednesday before this looks good again. But look at where it is as compared to the 30-day bottom. The 30-day bottom's here, and the 30-day top's way up here. So if she goes down and challenges the 30-day bottom, all right, fine. But I don't see it. Tomorrow's another day. SOL. Oh my, I want you to look at SOL, huh? When do you sell a call at the market? Do you receive that bid price? All right, let's open that up again. David just asked a question.
All right. When you sell a call, right, Craig David?
If I buy the stock at 12 and the current strike price at 12 right here, the bid is 29, the ask is 31. If I'm selling it, I'm collecting the 29 cents
At the market price. What do you think about MVO? That's probably why the bid and ask is below the last price for Paramount.
Okay. Yeah, when both the bid and the ask are lower than the last price, the market makers tell you to push it down. MVO. John Boy. MVO, you say. MVO. Yeah, sorry, dude. MVO is a monthly. I don't do monthlies because they just don't pay enough. All right, they just don't pay enough. All right, I like consistent, safe, predictable 1% per week. I can't get that with a monthly because you can only do a monthly 12 times a year because there's only 12 months in the year. However, weeklies is 52 weeks in a year. And if I'm getting 1% per week, that's over 50% per year. Also not 20 years. Okay, Roger, thank you for that. Next on the list, Whirlpool, WHL. Is that right? WHL. Wheeler Realty. Yeah, sorry. That's a no. Gallant, would you entertain any M, even pushing high? Oh, all right. Gallant, you've been here long enough. Seriously, Gallant, you've been here long enough. Look at this thing. Okay, here's your 90-day bottom, way over here. Here's your 90-day top today. Do you seriously think that's going to continue going up?
Seriously, you've been here long enough.
I mean, don't get me wrong, 44.45 to 44.50 is going to 62. That's 1.2%. Why would you do? Look, you're at a high of the year. Do you really? It could. Seriously, it could keep going up. But do you really think it's going to?
Blood, Sweat, and Beers. Oh, that's an interesting name. No, I don't see it either.
But alrighty then. Holy cow, we got 350 people here. And I'm looking at crap. I need something good to look at. Intel. Let's take a look at Intel. INTC. INTC. Intel. All right, so Intel, 3212. The 32 is going for 54. The 3250 is going for 32. Either one's going to give you over 1%. What system do you use? Well, this is right here, Thinkorswim from Charles Schwab. WRBY. I've never heard of them. WRBY. Never heard of it. You want me to look at something I've never heard of? WRBY. Warby Parker Incorporated. Yeah, that's a no. Sorry, dude. Let's go back to Intel. Because Intel's a yes. Why? Right is a no. WRBY. Yep. TTO. Pentium. Never heard of it. TTO. No. How much do you make an hour trading? I don't trade that way. I make 1% per week. And I only trade about an hour a week. GameStop's going to be a no. Sorry, dude. Palm Springs things? Yeah, no. I don't do stocks that don't have 20 years or more of increased dividends. All right, so Intel is going to give us our 1%. Okay, first thing I want to look at, where's my 30-day, my high for the year right there, my low for the year right back here in the beginning of June. Beginning of June last year for the low, and end of December for the high. Last 90 days, right here. Okay, so 90 days ago, that's the last 3 months, we got a high right here, the beginning of March. Our bottom is the beginning of May. All right, so the last 30 days. All right, I like this chart. Ready for this one? Your 30-day high right here on the 25th, gaps down, keeps dropping, a little bit of retracement. You have our new bottom on the 8th. The 30-day bottom's on the 8th, and here we are now. What do we have that we have up our sleeve? Check this out. Check this gap down. Gaps have a tendency to fill. So you have between here, where it is now, and 34.50. This is a good, I don't know how much better opportunity you can get than this one. Okay, let's take a look at seasonality. What does the stock normally do this time of year? Okay, if you guys don't know, if you've never seen this before, the blue line represents the movement for this year. Okay, the red line represents 10 years worth of data. That's 2014, 15, 16, 17, 18, 19, so on and so forth for 10 years. Not messing around with lower calls and chasing back up. Okay. All right, so here's where we are right now, middle of May. I want to see what it normally does. And that's pretty plain to see from here to there. A nice upward trend. Okay, so you get a nice upward trend. first of all. The numbers work over 1%. See, 32.13 to 32 is going for 54. 30-day highs way back here at the end of April. 30-day bottom is the beginning of May. 2 weeks to the upside. We have all this space between here and here to fill in the gap. Gaps have a tendency to fill, so that's a good thing. So there's your trade. There is a good trade right there with Intel. We all know who Intel is. All right, take a quick look at Ford. Somebody wanted to take a look at Ford last night. Ford. $12.18. The 12s are going for 20 cents. The 12.50s are going for 3. That's not quite now. Sorry. How do you feel about G-Wave? Yeah, that's a no. Sorry. G-Wave, we looked at it 4 times. It's been a no every time I've looked at it. So when will you purchase Intel? Tomorrow morning. Actually, I already own Intel. Hold on, I own some others. You know, dogs coming in and interrupting. All right, so you bought some Intel this morning. Way to go there, Al. I like the numbers. It just works. All right, somebody want to take a look at Alibaba. Now, just let you know I do have Alibaba somewhere else. Short-term, 3 to 6 months on Amazon forecast. All right, Jimmy, CBI. CBI. What the heck is CBI? Yeah, CBI is a no. Okay, CBI is a no. Monthly options, $29.89. The 30 is going for 75 cents. Okay, great. I got to share that 30 cents over a 5-week period. Okay, so that's a little over 2%. Divide 2% by 5, that's 0.25% per week. That's a no. Monthly options just don't work. Sorry, dude. I like weekly. Monthly options means I can do it once per month. That's 12 times a year. Weekly options, I can do it 52 times a year. How do you know the stock is going up by 1% a week? All right, RAX, that's not what I said. All right, RAX, I want to show it to you very slowly. Because apparently you didn't quite grasp it. All right, now, I never said the stock was going up 1% per week. What I said is I'm looking to collect 1% per week. How do I do that? Well, Macy's right here, 1912. That's what I could, tomorrow morning, I could buy it at 1912. Okay, a covered call is where you buy a stock and then you sell it to someone else using a call option. That means if I buy it at 1912, I can sell it to Tommy, Fred, Bill, Sandy, or whoever at 19. Well, why would I be selling it for less than what I paid for it? If I paid 1912, why would I be selling it for 19? Well, the reason why I'd sell it for 19 is because they are going to pay me 92 cents per share. Okay, so at 92 cents per share, I add it on to the 19, and then I actually collect 19.92, which is more than 19.12 by about 80 cents. Now, 80 cents is 4% of this current stock price. Okay, but the question you have to ask, do I like Macy's? Do I want to own it for a long period of time? Okay, because you just might have to. You know, Macy's has been in business for over 100 years. They've increased their dividends to the shareholders for 5 decades, consistently every single year, higher and higher and higher dividends. Those are the only stocks I like to buy. The only ones. 20 years or more of increased dividends every single year, higher and higher. Not once in a while, every single year. Dividend kings, dividend aristocrats, dividend champions, dividend contenders. Apple. Okay, we'll take a look at Apple. 191.30. The 190s are going for 2. The 192s going for 81. The 191s, yeah, the math doesn't work. Sorry. Oh, what software are you using? All right, Blackacre Esquire. That's not software. That is a trading platform with Charles Schwab. So if you get an account with Charles Schwab, you can download Thinkorswim, okay, onto your computer. Okay, I like it because it has everything I'm looking for. Was Sears a dividend king before bankruptcy? Brian, I really don't know the answer to that question. I wasn't investing when Sears was trading. Rax, you're welcome. Just lost me. Oh boy. Oh, this is getting uncomfortable. All right, it's 11:30. I usually quit this time of night to see if I can gain this guy. Okay, now you're saying I'm lost you, I'm assuming with Apple. Okay, Apple, I could buy it at $91.30 tomorrow morning. If I sell off the 90s, I'll collect $2.06 per share. Okay, I will be losing $1.30, which means I'm only collecting 70 cents a share, 76 cents a share. That's not 1%. Why do they have to pay extra? Oh, Rex, that's a good question. All right, so here's the answer to your question, right? If I'm buying Apple, the stock, I can pay $191.30 per share. If the stock goes up, let's say the stock goes up $10 to $201. All right, I make $10 per share. What rate of return is that? Well, clear. If the stock goes up $10, okay, and I paid $191 for it. Okay, if the stock goes up $10, I paid $191 for it, correct? So I'm going to divide $10 by how much I just paid, $191. That gives me a grand total of a 5% return for the week. So let's say I buy it tomorrow morning at $191, and then Friday afternoon it's at $201. That's $10. So I officially made $5, 5% on my investment. Okay, let's take a look at the other way. Instead of buying it at $191, let's say I buy the right, not the obligation. That's a call option. At $190, I pay $2.12 per share. Okay, so $2.12 per share for 100 shares is $2,120. No, that's not right. Clear. 212 multiplied by 100. Okay, so if I buy one contract, 212, that's 200 share, I am controlling 100 shares for $212. Now let's say the stock goes up $10. So if the stock goes up $10, what's my investment? My investment is 212. Okay, so I clear this out, $10, and I divide it by the 212 that I just invested. My grand total is 5%. Well, that kind of sucks, doesn't it? That can't be right. Yeah, it is right. All right, sucks either way. But usually, when the stock goes up, the value of the option increases. Okay, so if I'm buying the option at 212, and it's $212, and the stock goes up $10, the option is now worth $12, so it's a 500% increase. Yeah, that's about right. So you multiply it by the 67, clear, 0.67 multiplied by 10, it comes to a grand total of 6.7. So you add the 6.7 to the 2.12, you come to a grand total of 882, and you divide that by 212. All right, so you just made 400% return. So if the stock goes up by $10 and you do the option rather than the stock, because the stock is going to cost you around $19,000 for 100 shares. Okay, but one contract is $212. If the stock goes up, you get that money. For each dollar the stock goes up, you're getting 67 cents. So it goes up 67 cents per $1 increase, $10 increase. That is $67 times 10, $670, which is a nice return. That's why people do options. Coca-Cola is going to be a no. They're not really paying extra, just paying. What would you do at 265 right now? Well, I'd divvy it up nicely. 25% here, or 20%, 20%, 20%, 20%. 5 positions, roll them every week, go from there. How about TQQQ? It was a no a half hour ago, it's going to be a no. What are you going to say about Ford? Ford's a no. Riot Platform, that's a no. Makes sense. Do you buy HIMS? No. All right, it's 11:30. My arm is killing me. Sorry, guys. I did break my collarbone last week. It's still healing, so as I move it, it aggravates me, and now I'm feeling nauseous. So I'm going to go for the evening, and I'll see you guys again tomorrow. Okay? All right, this guy's Michael Scott. I have no idea who Michael Scott is. I don't know if that's an insult or a compliment. Your lives are getting a lot bigger. Congrats. Thanks, Zach. Thanks. Compliment. Okay, thanks. Okay, done. And now. All right, and here. Pause due to poor connection. All right, figure that out. All right. Stop that.